Welcome back everyone. So today's video, just a bit of a mindset thing. I didn't actually take any trades today. There was one setup which I looked at and I was a bit unsure about it. Anyway, I missed my entry. But today it's basically more about the mindset, being the trader, becoming a disciplined trader. And as it says, trading in the zone. I've been meaning to get these two books for a long time and I finally got round to getting to them. So I've listened to the YouTube videos of Mark Douglas speaking before, but I would advise getting them. They're really beneficial, I think, and just to listen to Mark Douglas and the things he says is, how to become a trader and the mindset behind it. And it's a very massive part in becoming a trader is your mindset. You can be the best technical analyst in the world, but without actually having the mindset to become the trader is a completely different ball game. Now, you could be someone extremely smart, doctors, scientists, so on. They may have this intelligence for that, but just because they're smart doesn't mean that they become a trader. To become a trader, you need to go against your emotions. In life, we're taught, if something feels scary, then maybe don't do it. Maybe you should avoid doing that thing. Whereas as a trader, if something's scary, you should go for it to build the discipline, to learn, to develop your skills, and ultimately learn what's right and wrong. You shouldn't fear taking a trade because you think I might lose. You should go into it thinking, no matter what the outcome, I will learn from this, win or lose. If you win, it's even more of a benefit. If you lose, well, take note and adapt. And if you don't need to adapt, keep plucking away at what you're doing. If statistically speaking, your trades you win 4 out of 10 trades, but you're going for 1 to 2, then overall you will be up, because you'll lose 6R. Say if you're going for, you take 10 trades, you win 4, lose 6, so you're losing 6R, but over the 4 trades that you win, 8R, you'll still be up 2R. Again, this is something else, your risk to reward. This is a massive part in becoming a trader. And also, only risking a set amount each time. Not a set lot size, a set percentage to the stop loss that you are taking. These are all things that help us to become a profitable trader in the end. So with that being said, if you aren't doing these basic things already, risking 1% per trade, going for 2R, if you're not doing so on, taking the same patterns, for example, how are you supposed to know that your strategy is working if you're just taking multiple different entry techniques? You're not going to get consistent results. And as a trader, we need consistency. We need to go in there, take the plunge. If we see the trade, buy it, sell it, hit that button, and move on. And hopefully, by the end of, say, 100 trades, you will know what's working and what isn't. Now, you don't even need to risk 1%. You could risk 0.1%. That way, you will actually, there's less on the table, and you'll be able to learn easier. And you'll be able to ride out the trades easier, because there's no fear in there as much. Fear is the biggest killer of dreams. Fear is the biggest killer of your dream of becoming a trader. And it's a really powerful thing, fear. But as a trader, we need to not be scared. Don't run away from what scares us, which in this case is entering the markets. We need to go in there head first and attack. So that's my plan of action, is to attack the markets like never before, but in a disciplined, controlled manner, as much as I can control it in terms of my strategy and what I'm doing to enter a trade. So that's basically it for that. There was a really good trade that I should have took on gold today, which I would probably have cashed out for a 1 to 8, no, 1 to 8, 1 to 1.8. 1 to 1.8, 1 to 1. That makes sense. So with that being said, we'll go over to the charts. We'll have a look at this little trade that I should have took today on gold, which I was a little bit unsure about, and then he ended up missing it anyway. So after me saying all that, today I should have took the trade, which I thought about, but I was busy working, and before I knew it, 5-10 minutes went by and the trade had gone. So, there was also a news release, which was something I thought maybe I should stay out of this one. Anyway, it would have been nothing to worry about. So, yeah, like I said, we'll get into the charts now. We'll look at today's trade and a little bit of mindset behind that. So this is the gold trade that I was looking at today. This is on the 4-hour time frame. So when I come to the charts this morning, this was the 7 till 11 4-hour candle close. And going off yesterday's sentiment and today's sentiment, the market was looking bullish still. There's nothing to tell me otherwise. The market's up. The last 4H candle closed bullish. Therefore, we're only looking for buys. Now, what I had in mind was this was the 4-hour candle, and I thought potentially what could happen is a pullback into this wick area here and potentially a 50% retracement. Now, this here is the 50% retracement. Let's just show you. So you can see there that the candle push, it's about 50.52%. So I was thinking 50% retracement is in line with this area of support, this wick area. So with that being said, I thought I'm just going to wait patiently, see what happens. Now, like I said, I was a bit unsure about taking this trade. We had that news release. What time was it? It was like 1:30. Yeah, retail sales. It turned out not to be anything too dramatic, to be honest. But anyway, ended up missing the trade. But it would have been a really, really nice trade, to be honest. So, as you can see here, this is the setup. The market's up. And I'll just wait impatiently. I didn't want to just hurry into the market. And the way that I trade, I look for a wick on the candle, which we're looking to get into before getting the continuation. Now, if you go back, I'll just quickly show you. All these candles, mostly, before we get the bullish, or whichever way it's going, whether it's bullish or bearish, the candle tends to create a wick first. Wick, 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 wick. Whether it be big or small, the candle tends to make a wick before moving in the direction that it's going to go in. And you can see this yourself quite clearly. When someone told me this, I thought, how have I never noticed this? So it is really, really simple. But the hard thing about it is actually getting into the trade at the right time. Have you gotten in when the market or the momentum in the market is going to go in your direction? Because if you get in too early and you get triggered in and then the market pulls back, wicks you out, you will then most likely see it wick you out and then go in your direction. So the more you do this, the more you get a feel for it. And I tend to find, on average, candles tend to create around the same amount of pip on the wick, if that makes sense. So, for example, this is the 4-hour close. This is the last 5-minute candle of the 4-hour close. And then this line here, slightly off, is the 4-hour candle close, the body close, because it is the final candle of the 4-hour, the final 5-minute candle of the 4-hour. We're on the 5-minute time frame. So it would have actually created a wick on the 4H here if you was looking at it at that current time. I didn't feel comfortable with that. I'd rather have seen this into this area at least, or, as I was thinking, a deeper pullback into this area of support, which is the wick area, and a 50% retracement of the previous 4H candle. So, as it happens, as you can see there, you see the buyers coming in on this key area here. But I was looking for that deep pullback, and what happened is we got the deep pullback. See, the buyers were coming into the market there, and at this point, I just got busy, distracted with what I was doing, and this is where I should have set my buy stop basically. And you want to set your buy stop on the flip of the 4-hour candle flipping bullish, because anything above this line is bullish, anything below is bearish. And this is just the way I trade. It's something which I got taught, and it's something which is proving to work out quite well for me, and has worked well for me. I've passed FTMO challenges in the past. Not FTMO, it was my forex funds. Anyway, that account went bust. Whatever happened to that. So yeah, this should have been the setup. So this is your wick forming now on the 4H candle. And as you can see now, this we probably would have got triggered in with that. And this would have been the trade. It would have been a beautiful, beautiful trade. You see there, consolidating, and then price starts to push eventually. Look at this, all this consolidation, and then it starts pushing up. So if this was me, so that's not actually a 1 to 2. This would have been the 1 to 2 here. This would have been the 1 to 2. But would I have closed it? Potentially. Would I have held? Potentially. We could have still been in this now. But maybe I'd have closed it early, because I do tend to close trades early, just before the TP, like I said in yesterday's video, just to secure the profits. So that was the trade. We'd potentially been still in it. It would have been a beautiful trade. Look, we closed bullish. We're anticipating the next candle to be bullish. Close bullish. We're anticipating the next candle to be bullish. Close bullish. Anticipating the next candle to be bullish. You see how this works. We close bearish. We anticipate the next one to be bearish. Now, if you see 4 bearish candles in a row, I wouldn't continue to sell that, because the market needs relief. The market doesn't move in one direction forever, but you can look back at this yourself. When a candle closes bearish, it tends to continue with another bearish candle, as long as you are going within the directional bias of the market. There's the odd case, like this here, for example. If you were to look on the lower time frame at this little piece of market structure, you can see here price pushing up, like so, pushing up. So this would be an uptrend on the lower time frames, and then price would stall out. We're failing to break above this area for a long period of time, and then you're getting that strong bearish momentum coming out of this zone, which we're failing to break above. If you go into lower time frame, you will see that you're breaking out of key areas of support, most likely. I won't be able to see it on this. If I go down to lower time frame, I could actually show you. And then you're just looking for that bearish momentum to continue. So I've had that bearish close. I'm looking for the next candle to close bearish. It's a simple approach, and if you can master it, it does work really well. Now, you're going to have to get the feel for this yourself if you take this on board. But yeah, I'm not going to say anything else about this for now. The video is getting long. Good bit of information there for you, good bit of mindset about the way that I trade, the way that I'm going about the markets this year, and the way that we are becoming the trader that we want to be. I talked about these things with passion. I'm very passionate about it. I've been doing this kind of stuff for a long time now. This is the year. We're having it. It's happening. So if you made it to the end, thanks for tuning in. I'll see you in tomorrow's video. Take care. Bye-bye.